It looks like a little bit of a mini rally going on in the local market here.
Good afternoon, Stephen. Correct. We have just taken the lead from international markets and we are fairly steaming ahead this morning. It looks like markets are ignoring all the current issues that we're having, the downgrades out of Europe. There's still the Libyan issue still on the horizon, but we really are following international markets and are heading stronger today.
Anything in particular driving the rally we're seeing? Is it just a change in sentiment, a relief rally? How are you seeing it, Yolanda?
Stephen, we are moving higher. Volumes, however, are still very low, and we've seen over the last 2 days where equities traded on the day are less than 10 billion. So market doesn't seem to be fairly convinced of it. Investors not really, they don't really believe they're really convinced as to where the market is going. We were up yesterday while international markets were off, and today we just seem to be following a different trend. We are seeing a stronger rand today, and that really just helping some of our rand hedge counters.
Well, it really appears to be the resources and the banking stocks again. So banks yesterday pretty strong. Continuing that rally today, we've had Standard Bank moving up very nicely, almost at 104 rand, and just a day or two ago it was trading at 98 rand. So big moves in the banking shares.
Correct, Stephen. Our banks have been soft in the first quarter, really following international banks. However, we did see some positive sentiment with an announcement coming out earlier that our banks could be cheap in terms of earnings looking forward for the next 18 months. So really, investors perhaps looking for value, and they're really seeing it in the banking sector.
Do you think some of those investors are foreign investors? Because we saw European banks under pressure yesterday, particularly Italian banks. Do you think some of those foreigners might be switching into South African banks?
It could be very possible, Stephen, purely because our banks are a lot more stable. We have seen just across the board a fair set of results. Obviously Standard Bank came out and that was fairly muted, but we had expected, they had given us warning, and we have seen that they have been really cleaning house. They retrench people, they're pulling back on their sponsorships, so really trying to turn around the bank. So really, and we saw First Rand coming out with very good results, and Nedbank ahead of market expectations. So banks do offer value for the rand, especially if you look at 18 months in terms of earnings, with possible speculation that we could see inflation really stick its head up towards the end of the year. Some market participants expecting an interest rate hike. So really, that kind of sentiment around our banks could really be supporting the view that banks we could see earnings really cover through.
Are banks not without their problems, though? We had a report out from PwC yesterday saying the relatively strong earnings growth that we're seeing from our banks really mask pressure on revenue and rising operational costs. We also had private sector credit numbers out this morning, which shows that mortgage advances not growing nearly as strongly as they were last year.
Correctly, I think they have some valid concerns there, but we have seen the private extensions picking up. Obviously, still very low from our numbers in the early 2000s. Consumers still, those that are employed, are really cutting their debt. We're seeing that the debt cost to ratio coming down there, but we have seen a bit of turnaround in credit for car loans as well as unsecured loans, and that really supporting the banks going forward. However, we'll have to see how the regulation and costs really are impacted. The banks are looking at cutting costs. We're seeing obviously with Standard Bank reducing their staff. We'll have to see what the rest of the sector is going to be doing in terms of cost management going forward.
Results today. Gains of 44% in headline earnings per share, return on equity 34%. It's also increased its dividend quite nicely. Your view on those Capitec numbers?
They came out below expectations, slightly below expectations. Their loans and advances came in at 95. We saw an increase of 95% there, which is which is a very good number for them. Their payments, however, came in or maintained at 12%. There was a slight increase in the dividend cover, which I think for some might have really disappointed. But we have seen the share price run from 140 Rand to its high of 170 Rand over the space of a couple of weeks. So investors not too concerned with those results, and they really have been taking market share. So investors really liking the stock. We are seeing the stock low in the day, but that's purely for a bit of profit taking from that higher.